Hey, Bulls and Bears. It is Wednesday, December 14th, 2022, back with another dose of economic reality. Some of you are asking why I'm always bundled up. I'm fixing my hood right now. Why I'm always bundled up. My recording studio here is actually in my garage, and I don't have heat. Now, I do have a three-bedroom house, but the rooms are occupied. That's what happens when you have a family. So I'm in my garage, no heat. Maybe one day, if this channel is really successful, I'll get a bigger place with a fourth bedroom, or maybe even have heat installed in this garage. We'll have to see. But anyways, let's get into the economic financial news. A lot to talk about here. The Fed raised the funds rate by another 0.5%. This was obvious, or this was expected by myself and just about everybody. They did announce future rate hikes. The thing is, though, some things that Powell said, I'm not sure if you guys caught this. So the rate now is about 4.5%. They're looking at a key rate between 5 and 5.25% by the end of 2023. Got some notes here. Also, Powell said, let me give you a quote here, which I think is ridiculous. The inflation data in October and November show a welcome reduction. Now, we talked about that in previous reports. There's not a reduction. The cost of living is still going up. You can point to a couple areas where, yes, prices have come down a little bit. Costs of filling up your tank a little bit here in the past 4 months. But overall, costs are going up. They even went up from October to November. But because they went up more slowly, they're saying that's a reduction. So I guess if you look at it, yeah, you could say it's a reduction in inflation, but prices are still going up. So people are still worse off this month than they were last month. And last month, they're worse off than they were before the month before that. So how is that a good news? And how would that justify lessening of the rate hikes? If the rate hikes before, the 0.75% rate hikes, there were 4 of them in a row, if those didn't work, if prices are still going up, it hasn't stopped inflation, it just slowed it down. If it hasn't stopped it, how are we justifying this 0.5% rate hike? Why shouldn't it be at least, again, another 75% hike or even more? If prices are not coming down overall, why not a full percentage point rate hike, right? So what they're saying and what they're doing actually makes zero sense. And I think everybody here, if you've been on this channel for a while, you see right through this, right? They don't want to implode the economy that rapidly. They don't want to be the obvious pin that pops the economic bubble, even though there's other bubbles that are popping right now, the automobile bubble and the housing bubble. We talked about that earlier. But there's some things happening to keep it propped up, to keep the housing market from collapsing. Home prices would have really crashed by now if it weren't for all the shenanigans, the lending that's going on. And I'm not sure if you guys caught this. Within just a few minutes before the CPI was announced, the Consumer Price Index just recently was announced. Within a few minutes before that, we saw a massive rally in the bond market. So some big money went in there and bought up the bonds right before the announcement of the CPI. And of course, the White House is out there saying that they never leaked it, that no one should have known this. Folks, let me put up this chart right here. Look at the spike right before the CPI announcement. You see the vertical line right in the middle of this chart here. Do you think that was the average retail trader, the average mom and pop investor like you and I going in on their E-Trade account or whatever and buying up bonds? Or was this big money, big whales that had foreknowledge of the better than expected CPI number? And we talked about that. It was better than the experts expected. Again, who are the experts? And are the experts told exactly what to say in order to get the kind of news that they need out there? I think you know the answer to that. So who was buying this? Wasn't you, wasn't me. I know that. It was big money. And that's just another example of the manipulation here. And it goes over in the housing market too, because this 10-year bond yield affects the mortgage rate. And when bonds are bought up, rates go down. Because normally you'd have to have higher rates to attract real investors. These are not real investors. These are whale investors. You could say they're real, but it's not someone that actually has skin in the game. It's institutions that have billions of dollars in liquidity. They can move the markets just by pushing a button. They can move the market up, down to zero if they want to at the click of a mouse. So that's what's happening. Manipulation still. So this is going to keep mortgage rates suppressed and lower than they would naturally if it weren't for all this intervention with all this whales in there buying up these bonds and keeping the rates suppressed. All right, so nothing shocking there. The 0.5% rate hike should have been higher if they really want to make prices come down, but they don't want to make prices come down. That's not me saying that. That's them saying that. That is the central bank saying that. They want to get back to 2% inflation. That means prices are going to continue to go up higher if they get what they want, just more slowly, right? So people are in record debt right now. People are going deeper in debt every month, most people. People are having to pull money out of their 401ks at levels we've never seen before, running up debt, credit card debt like we've never seen before. And yet they don't want prices to come down. They only want prices to go up more slowly. It's not going to fix the problem. So even what they're saying is the solution is actually more of the same problem. The cost of living is too high. The cost of living being higher in the U.S. is going to put pressure on wages. It's going to cause corporations and employers to be pressured to increase wages. And what are they going to do? Well, some of them are going to increase wages because it's less of a demand than shipping the jobs overseas. But you're going to see a lot of companies outsourcing to countries that have a lower cost of living, to countries where they can get ultra cheap labor. So the central bank plan is more of what caused this mess in the first place. More jobs going overseas, higher cost of living, going to have more people going in debt, prices not coming down. Thank goodness there's at least a couple areas where prices are coming down. Again, homes and autos. But if you have to finance those things, they're even going to be more expensive now than they were when prices were higher. So it's not really a solution either, the way you look at it. If you're a cash buyer, maybe. But let's get on to some other news here. Let's go back to 2020, the PPP loans. Everybody remember that? The Paycheck Protection Program. It was supposed to keep staff on these companies' payrolls in order to prevent a tsunami of layoffs and job losses, to keep these companies going, keep companies open. So a lot of people, a lot of companies applied for these, including pastors. Here's a pastor, a Florida pastor and his son arrested in alleged $8 million health crisis scam. Basically, the PPP plan, Paycheck Protection Program, came out to keep businesses operational. And a lot of businesses use this money in the wrong way. So this pastor here basically used it to buy houses and used it a lot more for just paychecks, that's for sure. NBC article right here, so you guys may want to look that up. So this money that gets sent out to help the economy, to keep businesses active, to keep businesses operational, a lot of times it gets looted, it gets taken for personal use, as we can see, just one of many examples. And speaking of arrests, we have more news here out of FTX. Of course, this guy that ran FTX arrested finally. He's facing over 100 years in prison. Sam Bankman-Fried. And also other people were arrested here. You guys remember the show, the sitcom, Saved by the Bell? The blonde-haired guy. He got charged. So we'll see if that sticks or not. But he was one of many people that got charged here out of the Wall Street Journal. SEC charges eight influencers in 100 million securities fraud. These were people that were said to have pumped and dumped in January 2020. So one of the guys was from that show. There's also some other celebrities that had promoted FTX, and we'll see. I don't think they should get in trouble, really. I mean, just because somebody promotes something or is in a commercial doesn't mean they should get in trouble unless they had some sort of pump and dump engagement. But just talking positively about a security or a company, I don't think that should be grounds for it. That would be like arresting everyone that's ever appeared in a Wells Fargo commercial because Wells Fargo got caught, putting out false accounts and inflating their numbers. So should we arrest everyone that's ever been in a Wells Fargo TV commercial? That would be hundreds of different actors. You can't do that. So you got to have direct involvement in the movement of the security or the stock of the company, in my opinion. But please let me know what you think down in comments. Saved by the Bell. I didn't watch the show, but I read that he was in a show back in the 90s. More layoffs here. The Washington Post, WAPO, Washington Post to conduct layoffs in the coming year. Post will conduct layoffs. Fred Ryan told employees in a town hall on Wednesday, that was just today, this is recent news, and posted it on social media to frustrated employees. Well, When the boom is booming, everybody's happy, everybody's good, people have jobs, jobs that are created by people going out spending money, swiping their credit cards. But when the swiping slows down, um, people lose their jobs. No two ways around it. So these job losses are sad on one hand for the people getting laid off and their families, but on the other hand, these were jobs that might not have even existed if it weren't for the easy money policies, the monetary stimulus, all the debt creation, all the lending, loaning out money that the banks loaning out money that they don't have. These things cause the booms and busts, and that's why we have to look at the monetary system. We have to look at lending and how banks are unleashed and they don't have to have any money in reserves in order to loan out money. That creates an artificial boom and this complete bull run in the stock market. This economy that created these jobs over the past 10 or 12 years was based on, again, easy money, low interest rates, accumulation of debt, people spending money that they don't have, and that's it. And so now we're going to see the reverse of that, and it's just going to continue. And then we're just getting into the hard times here. Think about this: we're in all-time high levels of debt, 7 out of 10 people, and we're just now getting into the rough waters. Interest rates just rose this year. So we're less than a year with high interest rates or higher interest rates. And they're not even that high when you look at historical interest rates. But yet debt is so high right now. Even these small rate hikes that we've seen have caused a lot of pain and caused a lot of people to second guess their household budgets. And it's going to get really, really bad before it's over. And again, I think we're just getting started. Let's talk about Tesla. Tesla, another drop in their stock, another almost 2% down today. The stock's down to about 158. Just earlier this year, 2022, we were in the 360 range. So from 360 down to about 158. So that stock continuing to drop like a rock. And you wonder why Musk can go out there and acquire social media companies and still keep things running. Well, it looks like that might be part of it. Maybe he's taking his eye off the ball a little bit. But also the markets are coming down. I mean, we're not seeing a crash, just like I predicted. I said there wouldn't be a crash in the stock market as well. But I said we continue to see the downtrend. So we're going to have to keep an eye on it, folks. I think all of us here are going to be on the right side of the trade. Keep stacking, because at one point this is all going to come to an end. The manipulation, something's going to happen, something's going to break, and this is going to come to an end, and we're going to see an absolute plunge in the markets and therefore a plunge in the economy. And the debt levels right now, unsustainable. There's going to have to be a bankruptcy tsunami. They could come out with rescue programs like the 20 million households on utility assistance right now. The rent moratoriums that are still in place over many cities across the country. Actually, LA and California are going to be expiring at the end of December for Los Angeles, but at the end of January for the state of California, if I'm correct. It might be flip-flopped. It might be the state at the end of December and Los Angeles at the end of January, but it's just a month apart. So very soon we're going to see if that's going to be extended again, or if we're going to see a big wave in an increase in homelessness here in California. Another thing we're going to keep an eye on for you, but we've already got homeless shelters filled up to the max here in California. Can they afford to have another 60, 70,000 people go homeless all at once? I don't think so. So I think they're going to have to extend it again. And again, if we had a strong economy, would we need all these rescue programs, the utilities, the free rent, all the rescue programs that we've seen over the past few years? And this goes back decades with other types of programs. People could not survive without these payouts. Simple. So it's a sad situation. But everyone here, I think we're probably doing better than the rest of the crowd, right? Because not too many people actually look at this news critically. They don't have critical thinking. They just look at the headlines. They believe what the Fed says because they're wearing suits. They believe what they say, but we all know it's a scam. We're not going to get caught up in this financial economic scam. So continue to use caution, folks. Keep stacking. Silver, at the end of the day, hard assets out of the system is going to be your key to maintaining your wealth. And I think silver stackers are going to be very, very heavily rewarded when this entire Ponzi scheme economy comes to a screeching halt. And it could happen one of two ways. It could be a deflationary crash if something breaks. It could be the cost of living gets so high that we see this bankruptcy tsunami that we've been talking about for a while now. and it's just going to continue. So keep stacking, folks. Big love to everybody. Bye for now. And